This is Bazaar Morning Call, broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. Welcome to the CNBC-TV18 Motilal Oswal studio. I'm Sonia and joining me is Surabhi and Nigel. It's a brand new day of trade and today is actually Holi. So happy Holi to all who are celebrating across the country. We had the day off yesterday, so we got a chance to celebrate. But folks, happy Women's Day, happy Holi. There's so much to celebrate today.
Well, happy Women's Day to you all and happy Women's Day to all our, lady audience as well. I'm glad that I'm lucky that I'm surrounded by, very strong women, both in my personal as well as in my professional life. And I'll see both of you all manage, homes, manage personal lives as well as your professional life. So more power to you all.
Well, let me give some compliments back. I don't think we women could have done it without the support of men like you in the office and at home. So I think it's partnership. That's what counts. And yes, we are starting on a very buoyant note. We haven't, if you'd noticed, spoken about the market just as yet because we're letting the celebrations roll. Don't want to spoil the party. Yes, a very, very happy Holi to a lot of people in the north and other parts of the country that are celebrating the festival today.
And it's a great time, a great era to live in, right? When we're having a lot of discussions about Women's Day, not just about issues like the gender pay gap, gender equality, the challenges that women go through. Just having these discussions is I think, the start to all the problems getting solved eventually. But, well, we'll have, this chat through the course of the day. For now, let's get back to the markets because it doesn't look like it's going to be a pretty start. The adjusted SGX Nifty is indicating that there could be a 50-point gap down opening this morning. And that's largely because of, what we've been talking about in the last 1 hour, which is the hawkish Fed. And perhaps the fact that there will be more rate hikes, there will be more aggressive rate hikes in order to tame inflation. Now, this is what Fed Chair Jerome Powell said in his statement. He said the latest economic data has come in stronger than what was expected, which suggests that the ultimate level of interest rates is likely to be higher than what was previously anticipated. And that's what got the ball rolling in terms of the sell-off across the globe. The Dow had a steep slide, almost 600 points gone overnight. It's now, in fact, turned negative for 2023. And the next meeting, the FOMC meeting, is on the 21st and 22nd of March. So the expectation is that it's going to be a rate hike, of course, but larger than the 25 basis points rate hike we saw in the previous policy. And that sell-off not just in equities, but in commodities as well. Crude has seen a sharp slide. We'll talk about that in greater detail. Banks were under pressure, U.S. banks. So, you had the likes of Wells Fargo, JP Morgan Chase, Goldman Sachs, all down about 3 to 5%. The next thing to watch will be the jobs report on Friday. It could show a resilient market that may perhaps allow the Fed to keep hiking. So that's the other thing to watch out for. So the global setup is not looking good at all. As we kickstart the day, the SGX Nifty is down about 50-odd points. But the good part is both foreign and domestic investors bought in the cash market. So FI has bought, about 720 crores. DI has bought about 750 crores. On Monday, we actually conquered that 20-day moving average of 17,700 thereabouts. So let's see what happens with the gap down opening. Does it get bought into? Does the sell-off continue? Time will tell. But for now, the start at least will be in the red. And, there's going to be a bit of this cautious, tentative view up until the Fed policy. Because the expectation now, as we know, is that, the Fed is going to keep the rates higher for longer. But even the rate hike is perhaps going to be much more than what was anticipated.
Yeah, I think, Sonia, this was a slam dunk that even the biggest bears wouldn't, they probably didn't see it coming. Everyone was talking about this Friday jobs report. We were all saying that that's going to be the real litmus test for this recovery rally that started. But Fed Chair Powell's comments, I just want to add one more quote to the one that you also laid out, and that really got the market rattled. He goes on to say, and I'm quoting Jerome Powell from the prepared text, if the totality of data were to indicate that faster tightening is warranted, we would be prepared to increase the pace of rate hikes. It's a very direct comment and probably one that was designed to really tame the market's expectation that the Fed is anywhere close to being done. He's gone on record in very explicit language, and these are prepared remarks. And that is what the market perhaps did not see coming, though, of course, we're always talking about the US 10-year yield around 4% and, how much higher the rates will go. He simply confirmed the market's worst fears. The interesting action actually happened in the 2-year. Not so much the 10-year, though the 10-year is now back around the 4% handle as well. It's the 2-year yield that topped the 5% mark. So the 2-year at 5%, the 10-year at 4%. The differential is 100 basis points, and that's quite high over the last couple of years. You know, we keep talking about this inverted yield curve in the U.S. It is inverted; it's getting a little steeper. And typically in the past, you know, this inverted yield curve is the warning sign of a recession. That debate's still very much alive and kicking. Other asset classes, gold shaved off. You had about $3 gone from crude, though. You know, the crude markets are okay, right? As of now, there's some stability out there on both Brent and on NYMEX. But markets across the board were rattled while we here in Mumbai were, of course, busy celebrating Holi. So the question is, what happens now? I'm just going back to watching the February lows. Now, for the Nifty, the February low was 17,255. It is still, you know, a good 200 points from where we are. So let's see how the market negotiates that. The Bank Nifty low was actually not the same day when the Nifty hit its low. The Bank Nifty low was on the budget day. And that's a level in question. Again, we're, you know, distance from these levels, but we need to see whether the shakedown takes out these levels on the way down, or whether buyers emerge. The one good aspect that's happened, again, the news flow around the Adani group of companies continues to be positive. So after the money coming in, a part of that money, about half of that money, has been used by the promoters to pare down their pledges. So at least on the Adani front, Nigel, the news flow is positive. But globally, we have enough to, I think, talk about on the red side of the screen.
Well, that's right. You know, the Fed funds futures traders as well. Now they're pricing in an 80% possibility that we can see 50 basis point rate hike, you know, on March 21st, 22nd odd. And just a couple of days ago, it was at around 22%. So that's clearly telling you the kind of hawkish sentiment that's returned back to the markets. In terms of our trade setup, well, the Indian markets, both the Nifty and the Nifty Bank, they're facing resistance at around the 50 DMA. We almost went to that mark, and we did a U-turn in Monday's trading session. But the point is, on Monday, well, the Indian markets came off the day's high. So maybe we're better prepared for this hawkish Fed statement that we saw. We'll get to that in just a bit. But volumes today could be relatively lower because parts of India continue to celebrate Holi, and hopefully, maybe in fact, the bears are going for that Holi leave. So the bulls will feel a little bit good, given that the volumes could be lower. And the institutions have been net buyers, both FIs as well as DIs. On Monday first, the Nifty came off closer on 90 points on the day's top. The Nifty Bank came off closer on 320 points on the day's top. And there was no fresh shorting that was seen. In fact, there was unwinding. Both on the Nifty open interest as well as the Nifty Bank, you had big unwinding of long positions that we saw. And that perfectly tallies in with what the FIs did. Well, they covered some short positions. So big short covering is what we have seen. Closer on 16,000 short contracts did cover out. And in the last 3 sessions, you know, you should pull up this plate up there. Last 3 sessions, the short positioning, net short positioning has nearly halved on the FI side of things. So a bulk of that short covering bounce has played out. And now the short positions from around 85, 86% odd, it's come down to around 74%. Moving to the options data, 2 strikes I want to highlight. 17,800 call, well, that was getting written in Friday's, in Monday's trading session. And on the downside, 17,700 put. Now, there was a sense that there was some writing out there. So just pointing at that 17,700 put, the average premium out there could be around 70 to around 80 rupees. So you deduct 70 rupees from around 17,700, you get your first stop loss. So the bulls will feel good if they can protect the 17,630 level on a closing basis, going by the writing we saw at around the 17,700 put. You know, if we break that, then maybe we open up moving down to around the 200 DMA odd. On the upside, resistance at around the 50 DMA, as I said, both those levels come up for you on the screen. The SGX 50 suggesting a pullback of around 130 points or thereabouts. The Nifty close, though, is closer to around the 17,775. So actually, we're bracing for around a 60-70 point downtick. On a closing basis, you'll want to see 17,630 getting defended. But let's see whether or not that goes. Women's Day, maybe Lady Luck shines upon the bulls. Let's see whether or not, you know, that works as well.
Okay, well, on that note, let's tell you what's lined up in the first half hour of the show. We'll get you updates from the markets across the globe. Steve Bryce of Standard Chartered Wealth will be joining in to discuss all that happened overnight, the steep fall that we saw in the global markets. We'll also have our research team bring you CNBC-TV18's list of top 10 stocks for the day at around 8:30 a.m. We'll do a fundamental stock analysis with Devin Choksi of KR Choksi. All right, on the equities front, first up, we have a comment coming in from Jonathan Garner of Morgan Stanley, who says they continue to be overweight China, Korea and Taiwan, and they're underweight India and the ASEAN region. China's economic recovery and an improvement in the global semiconductor and technology cycle should drive earnings estimates steadily higher through 2023, and valuations are still attractive. The main risks, according to Morgan Stanley, are geopolitical in nature.
Okay, let's get you some money market views as well. Kunal Sudhani of Shinhan Bank says US Fed Chairman Jerome Powell has struck an uber hawkish tone in his testimony to the Congress, pushing the dollar index above yearly highs. For the USD INR, he says 81.80 acts as a support, while 82.36, which is last Friday's high, is likely to be the first resistance. That is the level to watch, followed by 82.55.
All right, and on the bonds, Neeraj of Axis Bank says that the 10-year benchmark bond yield traded in a range of 7.38 to 7.43% for the week, gradually drifting lower on the lack of auction supply and US yields facing resistance at the highs. He says spreads between the government bonds and the SDLs widened on account of heavy SDL auction. For the rest of the week, he says the market would watch out for the US non-farm payroll data, the US CPI and the India CPI data. He expects the 10-year benchmark bond yield to trade between that 7.35 to 7.45 range, as long as the data does not surprise on either side.
Well, we have a lot of stock-specific action to track for you, and we'll get to that in just a bit in our special Top 10 segment. But before the timing, let's run you through the list. Adani Ports, Adani Enterprises, Adani Transmission, and Adani Green. We also have IGL, Sun Pharma, All Cargo Logistics, Power Grid, Vardhaman Special Steel, and Z Entertainment. Well, all of these stocks will be reacting to positive news flow, so hopefully most of them open up well in the green, and no stocks are likely, among these, are likely to open up in the red. So let's see how that goes.
Okay, so those are the stocks that we'll watch out for. All the details coming up in just a bit. But it is the global setup that is the biggest headline this Wednesday